All right, let's dive into one of the most powerful inventions in all of business history. Seriously, it completely shapes the world we live in, but for a lot of us, it's still kind of a mystery. I'm talking about the corporation. So let's break down what it really is. But to really get a feel for it, let's start with a question that's, well, pretty personal. Imagine you've got this amazing idea for a new business. You pour everything into it, your time, your passion, your savings. But what if things go south? Could that brilliant idea actually end up costing you your home? For a huge number of entrepreneurs out there, like sole proprietors or partnerships, the answer is a pretty scary yes. And that's because, in the eyes of the law, they and their business are the exact same thing. So business debts? Yep, those are their personal debts. And that's a massive risk that honestly held back business for centuries. So what's the solution? Well, what if you could build a kind of protective wall between your business life and your personal life? That is the revolutionary idea at the heart of the corporation, creating a company that is, legally speaking, its very own person. And this right here is the absolute core of it. The law actually lets us create this artificial entity, a legal person, that is completely separate from the people who own it. It's wild when you think about it. This new person can own property, sign contracts, sue someone, and even be sued, all on its own. And this is where you can see that massive difference in action. As a regular business owner, you are personally on the hook for everything. But the second you form a corporation, the company itself becomes responsible for its own debts. That legal separation, that is the real game changer. The separation basically acts as a kind of superpower for the owners. It creates this invisible but incredibly powerful financial shield. Now, the official term for this shield is limited liability, and it's truly one of the most important concepts in all of modern business. And it does exactly what it sounds like. It limits the financial liability of the owners. So what does that really mean for you? It means if a corporation goes bankrupt and owes millions of dollars, the personal assets of its owners, the shareholders, are safe. The absolute most they can lose is the money they put in the first place. Your house, your car, your savings, it's all protected. And that is what gives people the confidence to invest in big, risky, and innovative ideas. Okay, so that protective shield is one half of the story. But the corporate structure isn't just about playing defense. It's also one of the most powerful engines for growth ever created. Let's take a look at how that works. So how do they fuel this incredible growth? Simple, by selling shares of stock. Think of each share as just a tiny, tiny piece of ownership. But by selling millions of these little pieces, a company can raise enormous amounts of money, way more than a single owner or a small partnership ever could. This completely changed the scale of business. All of a sudden, you could fund massive projects, like building entire railroads or giant factories. It really kicks the modern economy into overdrive. And just think about the sheer scale of this today. A company like Apple isn't owned by just a few people. No way. It's owned by millions of shareholders all over the world, each one holding a tiny piece of the pie. It's that collective investment, that pooling of resources from countless people, that allows a company to operate on such a massive global scale. So we've got a protective shield and a high-powered engine for growth. Sounds pretty perfect, right? Well, not exactly. All of this power and all of this protection, it definitely comes at a price. Probably the most famous downside is something called double taxation. Let's just walk through this. First, the corporation makes a profit and pays corporate income tax on it. Okay, step one. Then, if the company takes what's left and gives it to its owners as a dividend, well, the owners have to pay personal income tax on that same money all over again. The same dollar literally gets taxed twice. And it's not just the taxes either. It's the sheer complexity of it all. Corporations are creatures of the law, and they have to live by a whole lot of strict rules. We're talking about things like mandatory board meetings, formal minutes, annual shareholder reports, complex accounting, just a mountain of government regulations. You can't just run it from your kitchen table. All this red tape requires lawyers and accountants, which makes corporations way more expensive and time-consuming to manage. It's a heavy price for all that power. So after looking at the good, the bad, and the complicated, what's the big takeaway here? How should we really think about the corporation? It really boils down to this fundamental trade-off. In the pros column, you get that priceless protective shield of limited liability and that powerful engine for raising money to fuel growth. But in the cons column, you have to accept the higher price of double taxation and the heavier burden of all that complexity and regulation. It's power and protection, for sure, but it comes at a very real cost. There is absolutely no doubt that the corporation is a powerful tool. It's an engine of innovation that has totally shaped our modern economy. But its incredible power and its unique status as a separate person with its own rights leaves us with one final critical question to think about. How do we make sure this incredible tool is always used for good?